Hi everyone, Jared here with Day Traders FX. Hopefully you guys are having a great day and a good start to the week. We have a pretty good couple of setups in the works. I've decided that I'm going to be watching the Aussie Yen a little bit more closely over the next 12-24 hours. So I want to show you guys a couple of things that are interesting looking there. Quick look at the calendar. We have nothing really coming up Australia related for a couple of days for the next day or so, so nothing to worry about there, or Japanese related. So the Aussie Yen pair shouldn't be too affected by too much of the coming news, but we've always got to keep an eye on that. Here's the Aussie Yen chart, and this is what is looking interesting to me. The two big things that definitely stand out is number one, the missed daily pivot that's back here from Friday of last week, and that's around 87.70. And then we have a missed weekly pivot that's down here around 87.85. So they're about 15 pips apart, pretty close together right there. The Aussie Yen has been bouncing along this channel pretty well for the last several days, you can see, and it's come up to some pretty good resistance. Now the resistance that I'm looking at here is this run up, this run down from the high of about 2-3 weeks ago, which is around 92.70, all the way down to this low of 600 and about 30 pips of 86.40. If we look at the Fibonacci levels right there, you can see that the Aussie Yen is finding some pretty decent resistance around that 50% fib. Now the high of this candle right here is approximately 89.64.5, so we're going to call it 89.65. If you look at that same level and you go back about a month, you'll see that we had some pretty significant support around this level. The low of this candle right here is around 89.68, so there's about a 3 or 4 pip difference from this low to this current high, but there's definitely something going on right there. And then once again from this range right here, you can see that we've got a 50% fib that we're working on. We have a pretty nice, just about bearish engulfing candle. One thing that I'm a little bit cautious and curious about is if we're going to get one more break higher and test that 61.8 and that 200 moving average, and that's definitely a possibility. That's about 80 pips above current market price, but so far in this move down, in this retracement, it's looking pretty good. Now, one thing I would like to look at, so once again, the fib level from low to high, we're sitting at the 50% fib. Another thing to keep an eye on is just the fib level from the low to high here, where it's kind of been running up. It's a little bit of a choppy range, but it's still a pretty good one. And we can see that so far we're still a little bit away from this 23% fib, and we know that 23 is pretty important because that nearly guarantees that we're going to get, a bit more of a rundown into that 38 and 50 once we cross that 23. So we're a little bit away from that. So a possible trade opportunity and a trade plan here would be just simply shorting against the highs right here. We're about 20 pips off those highs, having a 25 to ultimately 30 pips stop loss. I think looks pretty good. I think one more push for a double top here, if we can get in with some really tight stops of maybe even only 20 pips and target. Obviously, we need to cross this 23% fib, but I feel like the risk to reward is pretty decent here. If we had an entry, say around even 89.50, so just a few pips higher than current market price, and it's tested that 89.50 several times in the last couple of hours. That would put us, just a 20 pip stop would be plenty on that one, and just a run into this 23% fib would be about 62, 63 pips. If we cross that, then we have a move into the 38 of about 110 pips, with only risking 20. And I think that this is a pretty good little setup here. So this is what I'm looking for today, as far as we have a little bit of an ascending wedge in the works here, and if we can start to, or if the resistance, the current resistance at the 50% fib and that low of about a month ago and the current high now can hold, then I think we should get a very nice run down towards this missed weekly pivot. A safer target will be the 38% fib, which once again is quite a ways down there, about 105 pips. That's about 88.40. That's a potential target. Moving down into the 23% fib is a potential target, and that's about 55 pips. You can see it. That's about 88.88. So with this nice little almost double top in the works, you can see that it's even making a little bit of a lower high, which can be a good sign for that starting movement. I think this is a good little setup. Remember, if we get in a little bit closer to that high, maybe around 89.50 with some really tight stops, that should give us a nice move down towards that 23 and 38% fib. That's the setup I'm looking for right now. Make sure to follow me on Twitter. We've got more updates and details coming out there. Thanks a bunch, everyone.